Good morning,
Good morning,
everyone.
everyone.
Welcome to Summer Career Acceleration Program Virtual Orientation Part 1. My name is Mariana Leslie, and I help coordinate this program. Today, we will be learning about financial literacy. However, before we do so, I would like to go over a few very important details. So by this time, you should have received 2 separate emails telling you how to join SCAP Orientation Part 2 and SCAP Orientation Part 3. These orientations are mandatory, and if you are not present, you will be removed from the program. Keep in mind, if you registered for today's orientation, it does not automatically register you for the Part 2 and Part 3. Those orientations will be covered in Microsoft Teams. If you haven't received those emails, please reach out to me or Ms. Norsworthy. Also, by this time, you should have spoken with your employer about your start date, which should be June 15th, either a few days before or a few days later, your internship expectations, and summer schedule. You will be working 20 hours per week for 7 weeks. There will be a stipend of $1,400. Your stipend will be paid in 2 installments, $700 on June 30th and $700 on July 31st. In order for us to pay your stipend, we opened Achieva Credit Union accounts for almost all the students. If you haven't received anything from the Achieva Credit Union, you are missing some paperwork. So please, once again, reach out to me or Ms. Norsworthy as soon as possible. We want to make sure you get paid. If you did have an Achieva Credit Union account already, of course, we didn't open it for you. Also, each student is assigned a coordinator for the summer. That coordinator will be visiting you once per week to make sure everything is going as planned, and also will be collecting time cards. Your coordinators have been reaching out to you last Thursday and Friday. So if you have not heard from them, please email me. And if you have heard from them, please make sure you call them back. I need you to connect and figure out when you guys are meeting the following week. There will be 2 extra documents that must be filled out in order for you to get paid. Your coordinators will help you and walk you through that process. So last point, you will be off on July 4th, and also your internship will end on July 31st. That's it. So once again, if you have any questions, please reach out to me or Ms. Norsworthy, and I will turn this over to Ms. Ivana from Achieva Credit Union.
Well, first of all, good morning, and thank you, Mariana. And good morning, everyone. I know that you're all excited to be here at such an early morning, but I know that you are excited to actually start working and start receiving direct deposits. So I'm your presenter today, and I just want to say that I am here at Achieva Credit Union. I have been working for the past little over 10 years. I've been in different positions, and right now my role is actually a certified financial counselor. So I do help all of our members here in regards of credit and budgeting and accounts in general. So we're here for all of our members, and now you guys becoming our members as well with having accounts with Achieva Credit Union. We will be able to help you as well if you have any questions of how to handle your account after you receive your direct deposit, how to handle your debit cards. Please feel free and reach to any of our employees in any of the branches that you will be using. We're definitely here to work with you and to have these accounts to be benefiting you. Now, what I will actually start this morning is, first of all, I'm going to start with presenting you Achieva Credit Union story, because it's very important to understand you actually becoming our members today. It's very important to understand what the difference is between credit unions and banks in general, since banks, of course, they're big companies, they're not local. They have paid the board of directors, they're businesses that are working for profit. Where on the other side, you have credit unions that are local, that board of directors is actually pretty much on a volunteer basis. These are the people from our community that are going to make decisions that are best for us. And normally, the credit unions are very involved in the community to help each other. So this morning, please watch the video that is really short, but it's giving you a great story about my credit union, about Achieve a Credit Union, and then we'll go further with learning some things. Now we're back. I just want to say that this is the actually 8th year that Achieva has been voted as one of the best places to work in the Tampa Bay area. So from this point on, this is actually, I want to just turn your attention to things that we're going to speak today, or I'm going to speak today in regards of everything that we're going to see on our screen is actually something that you will need through the rest of your life. So this is your starting point to actually start working with your credit and building your credit scores. And it's very important to actually know how these things are impacting you, because everything that we do in life will actually be based on how much money we will pay for certain things that we're going to borrow the money for, and how much money is actually coming from our pockets. It does depend on either you have a good credit or bad credit. So the questions that you guys have today, I will answer definitely on some at the end of this presentation, but I would like you to also send your questions or email them to Mariana, and she will be forwarding them to me, or you can even email them directly to me. I will give you my email address at the end of the presentation, so that way anything that you have, feel free, and I will email back to you. Now, what I'm going to start with is actually, we are working in regards of the credit scores today, because everything is based for, would you loan money to yourself? When people walk in, sometimes in life, you will need to walk into a bank or a financial institution or a credit union asking for money. And the reason is because, especially these days, people tend to not first save to buy things, but they actually reach first to borrow money, either by the credit card or a loan, and then spend it on things that they would like to have. So asking a question, would you loan money to yourself first, it really will give you an idea, will you be paying that money back to yourself? The most important thing for everyone to know is that there are different types of credit reports, and credit reports in general are showing a risk score of how the person is paying, what type of loans that they're using, how they're using it, how they're paying it back as well. So a lot of factors go into how the credit scores are made in general. And it's not a formula that any of the credit bureaus are actually freely giving all of us, because each person is different. Even if I started at the same time with my sibling, for example, we both got one credit card at our age of 18 when we started working. My sibling could be using her credit card completely different from me. Now, when I say how she will be using, well, for example, if I'm just, my credit card with Victoria's Secret, for example, is they gave me a limit on $500. And I go to the store and I buy things just, let's say, about $400, and then I pay it back. Then I go again and then I buy $100 and then I pay it back. Where my sibling receives a card on the same limit of $500, and she goes, spends, let's say, $500, which is the limit, and then she starts not paying the payments back. She lost her job, for example, and not being paying payments. After a year, there will be a huge difference between the two of us. And the reason why is she was the person that maxed out her credit card. And when I say maxed out, it doesn't matter how big or small the credit card is. It doesn't matter if your limit on a credit card is $100 or $10,000, because what the credit reports do take in consideration is actual ratios. So she was maxed out, and the difference between us later was that I was making payments always on time, where she actually stopped making payments. Now, after a year, her credit report is ruined. Her credit score is very low, where on the other side, my credit score at that time is pretty high. Now, I know that at this point, maybe you're not seeing why is that important, but what happens next is we need credit for anything. We need credit started from if we want to apply for a car loan, for example. We need credit when we want to apply for the credit card. We need credit when you need to move into the new apartment. We need credit when you're actually getting a job, believe it or not. And how this will later, of course, now you are in high school, you will be, some of you will be going to college. When student goes to college, I know that you're going with the expectation that you will be earning more and you will be getting a good job that will pay well. Well, I can tell you from the standpoint where as a person who was actually hiring new employees, when you put your application in, if your credit is not good enough, you're actually in the category where you're not going to get a job, comparing with the person who has a better credit score. Now, I think that is big enough to think about of how you will use your credit in future in order to actually establish a good credit. Now, when you see this pie chart that I put on, what are the factors that are actually used for making any credit scores? As you can see, the biggest one is payment history. The 35% of this is how you're making your payments. Now, when you think of 35% takes on how you make your payments, and then only 10% is types of credit, and 10% is only new credit, and length of credit history is 15%, that tells you how big this is of how you will make your payments. Now, you heard, assuming from your parents or grandparents or family, that bills have to be paid on time. Otherwise, you're in trouble. This exactly is what is showing you on here. It's the same thing. If you make your payments late, unfortunately, that will affect you negatively. Making one payment late actually will not only not give you any points to raise your credit score, but on the other side, it will actually take your points down. And you will lose a good 6 to 10 points, which is significant when you're trying to actually stay in good ranges. And now, when you look up types of credit, what that means that are actually taking 10% of the credit score, what that means is that people that have, for example, parents or grandparents that have already mortgages, that have had multiple car loans, will have significant, or actually will have a difference in credit score, which it will be higher comparing with the person that only, for example, has credit cards itself. So there is no mix of credit lines. The best for the credit report is to have both revolving and installment loans. And I will explain actually later what that means. The new credit portion that is showing here, that is 10%. This actually, when you go to apply for a new credit card or for a new loan, there will be points that you will be losing at that time. So from the credit score that you have, that a person has, every time when they apply for the new credit, that will impact their credit score, and they will lose points for every application. Now, these days, I want to tell you that because that's actually inquiry on a credit report. Now, I will tell you these days, you do have option. Of course, you see this even on TV. A lot of companies are offering with their credit cards where you have ability to see your credit, either using some of the credit cards that are offering free credit report with it, or Credit Karma, for example, that is not a government agency, but it does show a credit score that is pretty similar to your actual credit score that is with the government credit agencies. And you will be able to track that way your credit scores, which is even these days we're encouraging everyone to actually, during the year, definitely look up their credit multiple times due to the fraud that is happening everywhere. Now, length of credit history, as you can see, is 15% of the credit score. Of course, this applies as far as a person such as yourself who is 18 years old, in a year from now, will have a credit score that, again, will be, even with the best usage, will be still less than the credit score that could be your grandfather's or parents' credit score. And that is, again, in regards of how long they had the credit history on a credit report, because they had multiple credit lines through the times. That will give them a 15% higher credit score than comparing with the person that is just starting right now. Now, amounts owed, as you can see, is the second biggest portion of the credit score. When I was telling you at the beginning in regards of comparing between two persons that started at the same time, such as myself and my sibling, if we both started at the same time and then used it differently, if I was telling you, if I'm not using the full card, if I'm using not the full limit, but staying at the 50% of the card usage, comparing with the person who's actually maxing it out, my credit score will be significantly higher. And this is due to this reason that I'm not owning on my card as much as my sibling is. In future, actually this applies to any credit cards in your life. Please, please, please make sure that you never max out your limits. Do not ever use the amount that they're giving to you. When a company tells you, either a bank, credit union, or a credit card company, when they tell you that you are approved on $1,000 or $5,000, that does not mean that you need to spend the full amount of $1,000 or $5,000. It means that you have to keep yourself to show that you are able to manage this credit line, and the best would be definitely to stay around 50% of your limit. Of course, in life, things will happen, and tooth will break, and tires will blow, and maybe in your new apartment, you will need the new furniture, and other things will be happening. And at that time, you will definitely be in a situation where you will have to reach for that credit card and use it a little bit more. But this is telling you that at least you know how these things are impacting you. So if you know that it will be bad for your credit, that it will ruin your credit in case if you are maxed out on your credit card, you will be the person that will make that decision to put as much as possible to pay it down as fast as possible to help yourself. Now, as you can see on here, the credit score ranges are actually different for the three credit bureaus, the three credit reporting agencies, which are, I'm assuming you have heard on TV these days and through the internet, it's Equifax, Experian, and TransUnion. But what you need to know is that credit score ranges are on all three a little slightly different. They started the different range and ended the different number, but on each one, they will have tiers as far as excellent, good credit, middle point, and lower credit and bad credit scores. And regarding where you're at on a credit report, that will actually correspond to your interest rate that you will be receiving on any type of loans. And as I said, that will actually also be concerning for when you apply for the different positions with employers in your life, or even these days, even the insurance companies are pulling credit. Now, the good credit scores are considered A and A+, and as you can see, this is the actual credit scoring system that is from Equifax. So the A starts from 700 credit scores, and then it could go all the way up to 850. Now, I would like to show you the actual real-life example, and I will tell you a little bit about this more, because this is where you can see right in front of you how much of a difference it makes. I don't have in here, but I will actually read to you the example of how much of an interest rate it makes a difference on items that are even higher, and how much money that means from your pocket. So we have, in this example, we have a computer that is $1,500 that is bought from a store for a period of 36 months. Now, the person who has, I'm going to say, a poor credit, they could be paying an interest rate on credit card or a loan of 18%. Now, when I say 18%, just so you're aware that interest rates on credit cards are even much higher. Interest rates on credit cards do go to 24.9, 26.9, even up to 29.9%. Now, as you can see here, a person who has a good credit would most likely be paying an interest rate of 10%. Now, when you look up at the difference at the monthly payment here, the difference is not that high because, as you can see, the person with the good credit could be making a monthly payment of $48, comparing with the person with the poor credit that could be making a monthly payment of $57. When you look up into those two, okay, it's not that big of a deal. However, as I said at the beginning, on a 36-month term, and if not even longer on credit cards, if this was a loan on 36 months, then definitely would be paid off. But if this was a credit card, this could take a lot longer. Now, if this was a loan and it would be done after 36 months, the person with the poor credit would be actually paying $324 more. Well, don't get me wrong, $324, that's, as far as I'm concerned, a little cruise. So why to pay that more? Now, like I said, as far as I have some other examples, which I would be more than happy to send you by emails, whoever is interested in, is, for example, purchasing a vehicle. If you guys, I'm assuming you're already, some of you are driving, and you will be, maybe some of you got the vehicles from as a family gift, or maybe you were even, some of you started having part-time jobs and starting to pay and help a little bit for the insurance and or payments, or paying back to your parents and family. But there will be time pretty soon that you will love to purchase a new car for yourself, because there is that red Mustang on the side of the road at that dealership that you're passing by every day, and it is looking kind of at you, calling your name. So when that time comes, when you walk into that dealership, and let's say the car is only $15,000, on a normal financing that is offered through banks and credit unions of terms of 5 years, which is 60 months. Now, this is where this interest rate difference will make a huge difference to you. And the reason why is, well, the person with the good credit, I'm going to say, and I just took an example of kind of interest rates that are in dealerships, and I'm not saying person that has the best credit, I'm saying the person that has good credit, comparing with the person with the bad credit. So the person with the good credit could be paying 9% interest. So let me remind you now, $15,000 car, financed for 5 years, which is 60 months, interest rate 9%, monthly payments will be $311. And now we're taking a person with a poor credit. They could be having an interest rate of 18%. Now, $15,000 car, financed for 60 months, with 18% interest, this would be $380 payment. So we're comparing $311 and $380. Again, when you say, okay, not a big deal because it's about $70 difference in payment. However, you're forgetting that this is over 60 months. It's 5 years of payments. This is actually a difference between person with the good credit and person with the poor credit of $5,000. $5,000 for the same vehicle, the same car. Well, to me, that is huge. To me, that's an additional little car. This is where this actually coming into place that is really important, like I said, for you to know how the things are impacting you or a good or bad way. And then you can make your decisions for yourself. Either you're going to take a path that will actually be taking you to build a good credit, have a good credit score, and pay less in your life for things that you will buy, or you will be taking a path that either you will not care what your credit is, or even knowing what it does to you, you will still not be making payments on time, using too much of your credit, and of course, with all of that, your credit score will be low, and you will be paying, as you can see, a lot more from your pocket than a person with a good credit score. Now, of course, it is too early for you right now to even think about, homes, but I just want to tell you so at least you have the idea on how the good and bad credit is impacting people that are purchasing homes. And I took the example of even just a small amount of $100,000 for home mortgage that is normally taking on 30 years. The person with the good credit could be paying, for example, 7.75%, comparing with the person with the lower credit who could be paying only 3% more, or actually 2.75% more, so 10% interest. And having a difference of a payment, the person with the good credit paying $716 monthly payment, comparing with the person with the poor credit or less credit of $878 monthly payments. Again, this is on a $100,000 home mortgage for 30 years. And when you look up into payments, and you can say, well, for between difference of $878 and to $716, that is only $160 or so. However, again, this is a mortgage for 30 years. Believe it or not, the person with the low credit will pay $58,000 more. $58,000, that is half of the property value of $100,000 that they originally bought the house for. So that's how big of a difference it makes. Now, I'm going to also let everyone know at this time, so I don't forget, that everyone is allowed per law to have a credit report annually pulled from all three credit reporting agencies through the website www.annualcreditreport.com. This is to actually pull the credit, but this report does not show your credit scores. In regards of see the credit scores, you have to pay through them, through the reporting agencies. Now, I would like to take us further, and I want to show you the 4 C's of credit. 4 C's of credit is important factors that all the lenders are looking at. And why I'm actually just mentioning this is due to the reason that later in life, you need to know that the loans are not based only on credit scores. Loan decisions that you will need in some point in your life are based on these other 4 C's of credit. And as you can see, the 4 C's are character, capacity, capital, and collateral. I'm just going to tell you that this way you know what is in regards of. What it means is criteria of when we're looking at 2 different people, they're going to look at the character of the person. Has this person stayed at their job for a long time, or is it a person that actually jumps from job to job to job? Is it a person who stays at the same home for a long time, or is it a person who's changing addresses every 6 months or so? Character is also, is the person who we're looking at to give them extending some line of credit to them. are how they have been paying their previous bills and previous loans. That shows their character. Is this a person that, God forbid, had a repossession on their credit report? Or is it a person that has some collections in their report? And now I'm just going to stop here as far as collections and repossessions, because this is something that I would like you to remember from this actually presentation today, because this is something that is applying to the rest of your life. The worst things that you can have on your credit report in life would be bankruptcy, short sales, repossessions, and collections. Now, you all have heard from parents and on TV these days and on computers about the bankruptcies. Of course, what that means is when a person is in too much debt, and unfortunately sometimes it's due to a loss of job or divorce, or it could be medical reasons, they have to file for bankruptcy. Now, what that does to their credit report is actually that takes more than 100% of their credit score, and they're not able to apply for any new credit, in most cases for about 2 years. Then after that, their, of course, interest rates are going to jump up much higher than previously due to the 100 points that they lost. And it's very hard to reestablish credit after bankruptcy. Now, the short sales, unfortunately, is, I don't know if you're aware of the term, it is in regard of giving up your property when you have mortgage. So that's, you guys are still young for that, but you will be hearing that term. It could be in a family that someone had a short sale, or you see on TV that there is properties that are sold as short sale. That means that, again, people that were in home, either due to the lack of income, have lost the ability to pay their mortgage payments. So there is a process that is called short sale that is reported to the credit bureau as well. Again, negative impact of 100 points or more. And again, of course, depending on the reason why this happened, is impacting later ability to access the new mortgage, or also because of the lack of, of the drop of the credit score, it is impacting other credit lines of paying a lot more interest than up to that point. Now, repossession. Repossession is something that I would like to speak with you more, because as a young person, we all heard from our parents what is not good to do, but unfortunately, I was young and I didn't want to listen, and then I learned on my own skin. So I would like you to know that the worst thing that you can do to yourself is buy a vehicle that you cannot afford and then return it. Like I mentioned, that red Mustang that is waiting on it for you on the side of the road in that dealership that you're passing by each day. And dealers, every time when you go in, they're like, oh, it's a new car smell. This vehicle is really just made for you, and look how good you look in it. That is all just to get you in to sign the contract. When you buy a vehicle, you're actually selling. They're selling you a contract, because once when you sign your name that you are taking a loan with them on 5, 6, or 7 years even, you are responsible to make the payments for those next 5, 6, 7 years. Well, you better make sure that you actually have a job through all of this time for the next 4, 5, 6, 7 years. And that job is going to be, enough for you to make not only that payment, but insurance on that car and any other bills that you have. Now, sometimes we are all, when we go in and we want to buy things, we're all taken by an urge of oh, I want this and I want this right now. But you have to make sure, can you afford it before you buy? So unfortunately, when that happens, that people buy vehicles that they cannot afford, and or they lose their jobs later on, or they get ill and not able to pay the payment. The process is called repossession, which means that you're giving your vehicle back to the dealership that you bought it from, and they're reporting to your credit bureau. Repossession now, again, is taking about 100 points off of your credit score, and it's going to stay on your credit report for a very long time. With losing those 100 points, now, well, maybe you just decided that you didn't like the car, and this is what you did. Now you're finding out that you actually, when you go back to another dealership to buy a different car, that you're going to pay a much higher interest. And they're now asking you for a down payment, a pretty good down payment, because now they can see that you had that repossession. They're not believing you if you will pay now for this new car that you're getting. A lot of institutions, such as banks and credit unions, will not even give you a car loan. They will straight deny you because you had repossession. They, of course, the same thing. They don't want to give you a loan that they know you're not going to pay. So think about that as a young person, how important that is of not buying a vehicle that you cannot afford. And then the last thing that I mentioned, that this was the actual, as the worst thing that could happen, is collections. And collections are actually processes that do take place after people don't pay their obligations on time. And for, of course, the banks or credit unions or financial institutions will try to call them and talk to them and trying to recuperate the payment. But if the payments completely stopped, after about 3 or 4 months, these companies will sell this debt to collection agencies. When that happens, is they know that they lost their money on any credit line that they gave you at that time. Now they're selling this on pennies on a dollar of what you owed them, and they're reporting you to the credit bureau. Again, that's a huge number of points for a collection that you will lose, about between 30 and 40 points, which takes you back. And now, again, that will be on your credit report for a long time. And any other place where you're going to go in and ask for a loan or ask for a credit card, they're able now to see that you had the collection. So a lot of times they will ask you to first pay that collection before they give you another loan, or they will recuperate a lot of money on their own, giving you either a loan or a credit card with a very high interest rate. So that was something that I wanted to tell you in regards of character. All of these items that I just mentioned were unfortunately bad items to have on your credit report, and it does take a lot from the character that any lender is looking at. Now, capacity that you see here as the second C of credit is, that means that, of course, you have to have enough income to pay anything that you're buying, to pay the loan payments, to pay the credit card payments. So that is applying on, like I said, during your lifetime on any loans that you're going to take. Capital goes into place later down the road when you're applying for bigger loans. Of course, the lenders will look, do people have some maybe properties that they own? Do they have some investments that they own on their own? And not just looking if, for example, if they're missing a little bit of a income, that's on the lower side, they will look for capital. And the last thing here, as you can see, is collateral. This is also important for you to understand why they're looking, why the lenders and banks and credit unions are looking into collateral. Well, for example, you will be buying a vehicle, and you found a vehicle that is 1993, and you like it for whatever reason. Maybe it's one that you were dreaming on having, but the bank doesn't think so because this vehicle is by age so old that they're afraid to lend their money on. Now, that's where they will actually have a standards set in place to prevent any losses, where they will say that they're going to only finance vehicles that are maybe 10 years old. So this is something to take into consideration when you go to actually purchase for your first vehicle or next vehicle, to actually ask your credit union or ask your bank before you go shopping around, what vehicle age are they considering for actually doing a loan against. And another thing, of course, at the same time is, if you're telling them or giving them a purchase order, you're buying a vehicle and that vehicle has 120,000 miles, the bank will most likely say no to that as well. They want you again to buy a vehicle that has less miles, and that's again coming back to, they want to make sure that that vehicle is in driving that is able to actually be driven for the next 5, 6, 7 years that they're giving you their loan on. So like I said, please make sure that you actually do get these questions answered from your credit union or from the bank before you start shopping. Now, I would like to move on to this is actually taking you kind of questions to ask yourself as far as the character, capacity, capital, and collateral. And as you can see, character is, do you follow through on your financial commitments? Do you pay your payments? How do you make your payments? How do you pay them? And then capacity, as you can see, is, can you afford to repay a new loan on top of your current obligations? Capital is, do you have a safety net if you have an expected financial hardship? And collateral actually makes a good loan better. Now, as far as, I would like to move on as far as what the good credit habits are. Well, what I would like you all to know, and I mentioned at the beginning that there was a mix of credit lines as far as the revolving and installment loans, and I just want to tell you that when you hear those terms, that it's actually revolving means that you can use, pay it back, use, pay it back, and that those are the credit cards and lines of credit. And then installment loans, and installment loans are the ones that actually have a set payment in place that will be paid off at a certain time, such as with what we were actually mentioning right now, car loans that are taking on the amount on a term of 5, 6, or 7 years with a set payment. And once when this is paid off, it doesn't mean that you again have the same amount of money to be used on a new vehicle, but you have to go and reapply because the first loan was paid off. So installment loans could be secured or unsecured financing, and the car loan is actual example of secured financing because it has that collateral behind. The mortgages, the actual home loans are also type of secured financing because they have that home that is collateral for the mortgage, and then boats or RVs or motorcycles as well. Now, the types of installment loans that are unsecured would be signature loans and student loans. And when I say student loans, this is for students that are planning on going to college. This is something that you will actually come across when you're applying for student loans. You will, with some companies, they will ask you for put co-signers with you. And the reason why is, well, some of you don't have any credit established yet. Your credit scores are 0 because you're not using any credit lines. You don't have any credit scores up to this point. And they will ask for a cosigner, which it could be a family member, such as mother or father. For the reason why is they want to make sure that if you don't pay your payments on time in the future, when the time comes to pay back these student loans, that your mother or father are responsible as well. However, when your parents do sign with you on this loan as a cosigner, that it will actually show on their credit report as well. So the impact that you will have with making payments or being late on your payments will be impacting them as well, will be impacting your parents. Now, what I wanted to tell you in regards to this is, please remember, you guys will be actually asked by family members, by boyfriends, by girlfriends, to also be co-signers on their loans in future. I would like for you to think good and to think hard before you do this. Do not co-sign for anyone that you're not sure if they will pay back their payments. Again, as I said earlier, as I mentioned, when you actually sign, when you put your signature on a loan, you're signing a contract. You're actually going into this kind of marriage with that person who is also responsible with you for the next 5, 6, or 7 years, because those payments have to be paid. So think hard and think well before you actually do sign on anyone's loan as a co-signer. Family member, of course, who is signing for you is definitely, as parents, they're planning on helping you for the future, but be aware that because it's showing on their credit report, they could be stopped if they need in the future while they're co-signing with you. If they need any type of a loan for themselves, this student loan that you will have will impact them and possibly could have them not being given a loan to them because it's too much debt on their credit report, which includes your student loan. So before you're applying for student loans, make sure that you're applying only for that much that you need. Do not get taken in with applying for higher amounts and then spending on other things outside of the educational purposes. That's a lot of students unfortunately get sucked in because it's very easy when you're applying. They will definitely give you a student loan for amounts that you're asking for, and then if you have some money that is left on the side, pay it back into that credit, into the loan itself. Do not spend it on things that later on, this is actually there is an interest that is being applied to the loan, so you will have to make a lot more interest payments if you have taken more in loans. Now, as far as what I mentioned also is, don't overextend yourself. That's a good credit habit. Do not apply for more than what you need. One mistake that I would like for all of you to know is, as a young person, I walked into the mall. I didn't have credit, and of course, like I mentioned, Victoria's Secret gave me a credit card, and then you go to a next store and they're telling you at the register, oh, we have extra 10% off if you apply for the credit card today. Well, I didn't know that the person at the register is actually making money with selling you a credit card. They do get, depending on the store, $5, $10 from each application. As far as I was concerned, I was saving on 3 blouses, maybe $1.50, but I didn't know that application was actually hurting my credit, because each application takes points off my credit score. So I had the Victoria's Secret credit card for 6 months. I was somewhere in a range of 660 credit score. After about 8 months, I was about 660 on the credit report because I was making all of my payments on time. And then I walked into this mall and I went into 3 stores and applied for 3 credit cards at 3 registers, saving $6, $7 for all 3. What I did to myself is I got my credit score down to 620, which then when I went to actually purchase a vehicle, when they told me, then my credit score of 620 was unfortunately now giving me an interest rate of about 9% on the vehicle. And now I was actually, in order to pay the 9% on the vehicle, I had to spend thousands of dollars more comparing where I would spend with my credit score of 660. So be aware of these. Do not apply for credit that you do not need. Be aware how it impacts you. And don't overextend yourself. So spend what you can afford to spend. Now, these days we're all guilty of actually being impulsive buyers. The whole society has moved from saving to spending. And with that, please make sure that you are aware. Do not make impulsive purchases on your credit cards. Once when you start having your credit cards, companies will even start sending you these letters. If you have not started receiving these letters by mail already, they will start sending you offers for credit cards. All of these credit cards, of course, are coming with a high interest. Well, think before you pull out the credit card to purchase anything that you just saw. Oh, there is a new pair of shoes that I like, or there's a new purse, or for, guys, anything that you guys like. I mean, it's easy to spend, but it's not easy to repay the debt. As far as good credit habits, please do let know companies that you have either bank accounts with or credit cards with or any loans in the future, what your addresses are. People do make a lot of mistakes. I see that from, of course, me working here with Achieva Credit Union, and throughout the years, people forget to change their addresses or contact information, which then unfortunately is bad when something happens with accounts, or if the bank is trying to, or credit union is trying to get in touch with the person for any reasons, because you have a credit line with them, they're not able to. Especially these days, as I mentioned earlier, there is a lot of identity theft fraud that happens, and a lot of debit or credit card fraud. So you have to be able for your financial institution to get in touch with you to let you know if there is any unusual activity going on, or anything else that they need to speak with you. Now, if you're receiving your statements at home for any of your credit cards or accounts, or if you have them online, please make sure that you go over your statements. That is actually a very big deal these days, like I said, especially due to this identity theft fraud and credit and debit card fraud. Make sure that all of the transactions are valid transactions, they're your transactions, because there is by law only certain short amount of time that you can actually validate and or dispute anything that is not yours. And if you do not actually look through your statement, then it could be too late by the time that you realize that, oh my God, a company that I don't even know who they are has been taking money from my debit card or credit card for last 6 months. Well, now it's too late for you to actually do anything, and by law, the financial institution can't help you and get you the money back. So please be aware how important, this is of to be aware and to be in touch with your financial institutions. Now, like I said, do not overextend and do not apply for credit cards that you're not going to use. And Now, when you being young students, I know that your question is, accept student loans, how can we actually establish credit? First credit could be established with some financial institutions such as credit union. With Achieva, we do actually have what it's called builder credit card, which is the credit card that is given specifically to young people that started working and have direct deposit. Those credit cards are given on a small, relatively small amount as a limit of $500, and they are the start where with making payments for the next 6 months, you will establish a credit score. You will establish your credit, and you will be able to see your credit score after first 6 payments are made. Now also, not only in Achieva Credit Unions, but in general, there are loans that are called share secured loans, and they are actually the loans that are asking for collateral. They're asking for cash, your funds, as a collateral. What that means is the person who is applying for this type of a loan, share secured loan, has to have a minimum of either $300 or $500, depending on the market where you're applying, which financial institution you're applying with, that you will be placing into your account, and then there will be a loan given to you in the same amount to be paid back. So for the time of the loan, these funds will be frozen in the account. You have 6 months to make the payments, and after 6 payments are made, like I said, that is when your credit score will actually show for the first time. Now, some of the people that already had credit, you guys are too young for this. We do offer, like I mentioned, in my role of being certified financial counselor, I do help people with rebuilding credit. I'm not going to go much over that because that's not applying to you. But I just want you to know that, yes, there are ways to rebuild the credit when there is some boo-boos that happen. It does take a long time and a lot of effort from the person. So that's why I'm trying to make you aware how important it is for not making mistakes that you know where these mistakes will take you at the first place. Now, as you can see here, I am putting what I already said a couple of times because I want you to remember, please, due to the identity theft these days, as you can see, monitor your credit report. Even as a young person, it's unfortunately very easy for the Social Security numbers to be stolen, and these days the bad people are abusing this. And according to the CNN, more than 145 million people's information was compromised through even the government credit reporting agency, through Equifax. So sign yourself up once when you can. After being age of 18, sign yourself up for identity theft protection programs where you will be monitoring your credit and getting alerts for anything that happens on your credit, which is important. If someone else is using your Social Security numbers and your information, you will know, since it's not that they're going to use it only here in Tampa Bay area, because you can see sometimes, actually we see that this a lot of times where it's happening, that our members had their information stolen and used, even in the state of Michigan, showing up that they're applying for loans or credit cards in the state of Michigan or New York, and people that have not even left Florida at that point, it's easy to know that that's not theirs. As I mentioned earlier, please remember that you have that annualcreditreport.com that you're able to see in all of your credit lines. And as I said, due to the fraud, there is errors as well that could happen, and that's the reason why you have to keep an eye on a credit report to be able to either work on errors to fix them and to dispute them, or to make sure that the fraud items on the credit report are actually taken off the credit report. Now, I would like just to mention one thing as far as you being young students, as far as having accounts. In general, it's very important, and of course you hear this all the time, but savings is something that maybe your parents were able to do, and maybe your parents were not able to do, but it is a part of our life that will make a difference when the time comes. If you're able, when you start having your jobs, to put the money on the side, do it start as fast as you can, start as soon as you can, because it makes huge difference in lives as far as when things happen. And again, life will happen. So there is multiple types of savings that you can establish for yourself, and it doesn't matter how you call them, if it's emergency savings or whatever you give them your name, because like I said, tooth will break, friend will need money, car transmission could give up if you're driving an older vehicle. You have your plans. You have plans to travel. You have plans to even buy a new phone, to buy a new car. You have plans to move out from your parents' house or from apartment. And for all of this, you will need to have some money saved on the side. And having that money saved, there is no better time than now. There is definitely no better time than now. Start saving with your first paycheck. Start saving with your first job. And what I will tell you is, as an example of how much of a difference it makes, because don't get me wrong, of course, it's too early for you to think about retirement, but that will come one day. We're all unfortunately getting older, not getting younger. And for example, if you start saving $100 per month, if it's invested into any investments that are earning, I'm going to just put as an example, 12%, and you start even at your age of 25, with $100 per month, with interest rate of 12%, you starting at 25, by age of 65, you will be a millionaire, because this money will grow to actual $1,200,000. Now, I want you to know why I said there is no better time than now to start saving, is due to the reason that if you just wait 5 years after this example, so if you wait until age 30 to starting to invest, and you invest same amount, $100 per month, same interest rate, 12%, by age 65, so by the same age, now you no longer have $1,200,000. At this point, the person, only for that 5 years difference, only has $643,000. That is half of what originally you could have saved if you started at the age 25. Now, for the person that waited 10 years, so not starting at age 25, but starting at age 35, I can tell you, with the same $100 monthly, they will have saved only $349,500. Well, difference between 25 years old and 35 years old, 10 years, it made a difference of between $1,200,000 and $349,000. That is huge. And then if a person is beginning at the age 45, then it does take them 10 times of bigger investment just to grow 1 million by that age of 65, which of course that would mean that they have to put $1,000 each month. But who is able to put $1,000 just on the size of savings? That's a different question. So that's pretty much what I had for today. I do have some questions that we received from students, so let me just answer those if I can, kind of shortly. And as I mentioned, please feel free to email me, or you can email Mariana, because you guys all have Mariana's email, and Mariana can forward them to me to be answered, because I would like to be able to help each one of you, since if this is your first account, please make sure that before you use the money with your debit cards, that you are actually have your, look up your account online, use your phones and mobile app to look up how much money you have in your account, and then use your card. The most important thing to know in regards of how to use accounts is that you have to take care and constantly know how much money you have in accounts. The worst thing to happen is for people that don't know what's exactly in, and then they use their cards, and then there is fees and there's problems, and the money comes in and covers the negative amount, but then again, person used the card for not knowing, and there is more fees. So that's with any accounts that you will have, make sure that you're logging into your online banking, either through computer or through your phones, through the apps, and verifying what you have before reaching out to spend money in any stores or anywhere else with cards. The questions that you guys have are, let me see here. We have how to establish credit score first time. Well, I think I actually did answer kind of throughout this presentation that you guys will be establishing credit. Either, like I mentioned, you can apply for the share secured loans, or first builders credit cards. And of course, if you're not planning on doing that, if you want to wait until you apply for the student loans, but as soon as you're age 18, as soon as you have income, you're encouraged to do so in order to actually start building your credit score, because the time that you have it helps. It helps that, even if you have already established score by the time that you apply for the student loan, then it's even better, because if they can see that you have worked with your small credit card and you worked well and you made your payments on time, then there is possibility that they will not ask you for a co-signer on your student loan. And as I mentioned, credit score, it does take first 6 payments on any credit line before your credit score actually shows up. Let me see other questions. When I get student loan, will that help me for my credit? Absolutely. When you get your student loans, they will be reported to the government agencies, to the credit agencies, and when they're in deferment, because there are programs that your loan payments on student loans are deferred until you finish your school, they're being reported as paid on time. So each month that they get reported, they will actually help raise a couple of points for you, for your credit score. Now, please remember, on the other side, when they're no longer in deferment, make sure, first of all, that you are applying online to and taking care of these student loans as far as refinancing them, applying for deferment on times, because this has to be redone, I think, every year. Because when you are late with your paperwork, unfortunately, they're getting reported as late, which will also impact your credit scores negatively. So just make sure that you remember that you have to be on time with your student loan. And once when they start being reported as far as the payments, these student loans do go into consideration. They have to be, of course, my advice is to pay them as soon as possible, because later in life, as I mentioned earlier when we started, is those student loans, they will be on your credit report until the day that they're paid off. So also, they cannot even be included in bankruptcies. So they're never going to disappear, except if you're one of those programs where government is actually paying them off. However, for all the other students, please make sure that you make your student loan payments on time. Set up auto payment later on, because that's the best way of not forgetting your payments. That helps a lot. And as I mentioned, pay them off as soon as you can, just because maybe at some point in life you will need a loan for, maybe even a tooth, as I said, that will break. And then possibly if you have too many student loans on you and too little of a income, you can get denied just because you have too many student loans that are unsecured. Other questions that we got here is, will I be able to get vehicle loan on my own? Okay, so this is a good question, because I was talking a lot about vehicle loans during this presentation, but I did not explain as far as will you be able to get vehicle loan on your own. So as a young person, when you start job, most of the financial institutions would like to have you a job for more than 6 months before approving a loan. That's number one. And then number two is that you, as a young person, most likely you have to have some money saved as a down payment for the vehicle. It does really help out for financial institutions to see, for example, if you're buying a vehicle that you need a loan and it's $15,000 and you already have saved $3,000 as a down payment, that is telling them that your character is strong, that you have ability to save, and that this way you will have ability to repay the payments. Now, financial institutions, if you don't have that much saved, and the financial institutions that are kind of conservative, they will ask for a co-signer, which would be a family member, most likely parents. And the reason why is because you don't have nothing on your credit report. If you didn't have any credit cards previously, they will ask for another person to actually kind of vouch for you and make sure if you stop paying your payments, that the second person who's co-signed, that they're making the payments. Why is it important to save? Well, I kind of already did speak about that. That was your question. It's important to save because life will happen to you, and there will be so many things that you will need in your life, and you need to get ready before things happen. Don't get me wrong, some of you are fortunate enough to have parents or grandparents who are there to help, but sometimes maybe they're not going to be in that situation to help you, or some of you don't have anyone to turn to, and that's why you need to be the one that will actually build your savings for yourself to be there when it's needed. And the last question that came here from you guys is, what is best practice how to handle your bank account? So as I mentioned at the end, this probably was a question from earlier, the best practice to handle the bank account definitely is to make sure that and it's important to actually log in every couple of days minimum into your account, just because of the fraud that could be happening, and that way you need to be aware of what type of transactions are going through, as well as also of knowing your balances before you do any type of transaction. These days, there is fees, a lot of fees that banks have, or credit unions or financial institutions in general, and those fees that are called non-sufficient fund fees, or NSF short, those fees are high. They're normally between $34 and $36, and you know, if you're a person that didn't check your balance in your checking account, and then from work you went to McDonald's, you bought a sandwich and a soda and spent I don't know, $4.30, and you only had $3.50 in your account. Well, that sandwich and a soda just cost you additional $34. And like I said, that is a lot of money, and it could put you into trouble as far as later on, because you're not able to repay all of that money to be reported. So definitely please make sure that you are looking into your account, making sure what your balances are, what your transactions that went through are, and just be aware. So as far as quick fix repairs, I'm not gonna speak about that, because this is more in regards of actually people that have established credit and then had certain bad things happening in life. But I just want to tell you, because this is important, that there is no quick fix with credits. That's what I want to let everyone know. People need to be aware of scams that are these days going around, as far as offering a quick fix. Different companies that they would just like you to pay to them. And again, there is no quick fix for credit reports, credit repairs. It does take a long time to repair, and it does take a lot of effort and a lot of money to repair the credit. And as I said, that people that have problems with their accounts, they are being reported. They're being reported to the agency that is called Check Systems. And this is actually between the financial institutions. So if you're negative in one account and you're not paying to that financial institution, if you are just trying to play a game and go to another bank or another credit union to open an account, they will be aware that you owe some money to a different bank, and you will not be able to open an account, different accounts. So this is as far as everything that I had today. So I really appreciate your patience and you being here with us, and I hope that you have learned something new. And no, there is no test today. We don't want to scare you. Definitely, this is just for your benefit and for you to learn on what to do and what not to do with your credit. This is kind of in quick and general about all of the terms that you will see and that you will hear in regards of the credit. And as we said, definitely, you know, be aware of how it's impacting you, and make sure that you're taking the best approach possible. I just want to remind you at this point, as Mariana said at the beginning of this presentation, please don't forget that you do have orientation, second and third orientation tomorrow and Wednesday. And if you have any questions, please feel free to email Mariana or Brittany. So once again, I appreciate for everyone's attendance today. And we do have, for all of the attendees, we do have small gifts from Achiever Credit Union, which will be distributed by, I think Mariana said, by coordinators to you. And then in regards of the accounts with Achiever Credit Union, when you do call, if you have any questions on your account, if you do call credit union, our customer service number, please, you need to know information of, we have to make sure that you are the person who is actually owner of the account. So we have to ask you questions. So you need to know your social security number. You need to know your date of birth, your email address that you gave us, your actual address that you gave us. We did open for each one of you savings and checking. account, and in order for you to actually log into the website, to our online banking, you need to log on Achieva website, www.achievacu.com, register, or actually log in. You have to use the first part of your email address as a login name. So we did assign you login names. It's the first portion of your email addresses. So, for example, mine is Ivana_Manoilo@yahoo.com. So for me, username would be Ivana_Manoilo. So anything before Gmail, Yahoo, or anything before that at Yahoo or at Gmail would be your username for the account. So thank you once again for your participation today, and I hope everyone has a good day. Congratulations on going through this program. It is a great summer career acceleration program, and welcome to the Achieva Credit Union. Have a great day, everyone.